What if the trust you created to protect your home actually creates costly confusion because your homeowner's policy was never updated? Watch now.
Is your trust truly protecting your family, or is it simply an expensive binder filled with assets that were never legally connected to it? Watch now.
If disaster struck tomorrow, would your deed, trust, and insurance policy work together, or leave your family fighting for answers? Watch now, here at Secure 65 Health Plans.
Protect what you build. Protect what you build. Protect what you love. Protect what you love. Stand strong before the storm and rise above. Give your family direction. Give your loved ones a voice. The best time to prepare is while you still have a choice. Protect what you built. Protect what you built. Protect what you love. Protect what you love. Let your legacy reflect everything you dreamed of. What could take everything you built? It may not be what you think. A crisis never
Talk
sends
Power
invitation.
Thursday, when your trust and homeowner insurance policies don't talk to each other. So you guys, what if you did the responsible thing? You created a trust, you transferred your home into it, you organized the documents, you even told your family where the folder was, and then discovered after a fire, a storm, earthquake, whatever major loss is there, that your deed and your homeowner policy were not speaking the same language. That's the kind of problem nobody wants to discover while standing in front of what used to be called the living room. Welcome everyone to Talk Power Thursday, where we don't just tell you to get your paperwork together, we explain which paperwork needs to speak to the other paperwork. Because documents can sit in the same drawer, you guys, for 10 years and still act as if they've never met. Hi everyone, I'm Moné Swann, and you guys asked for more conversations about trust, and I heard you. So today we're connecting trusts, homeowners insurance, life insurance, beneficiary designations, incapacity planning, retirement planning, and the transfer of a family legacy. Now, this is where planning becomes real, you guys, because a trust is not an isolated document. Insurance is not an isolated product. Your deed is not an isolated piece of paper. They are parts of one financial household. And if one part changes, well, the other parts may need to change with it. So before we continue, let me be clear. This program provides general education, okay? Trust law, probate rules, taxes, creditor rights, Medicaid rules, and insurance contracts vary. You guys, they vary from state to state with individual circumstances. A licensed estate planning attorney should advise you on all legal documents. A tax professional should advise you on all tax consequences. And one of our insurance professionals, licensed professionals, should review your actual policy and carrier, also known as company, requirements. We're giving you the questions to ask today because one intelligent question asked before the crisis can be worth far more than 50 frantic telephone calls after one. So let's begin with the trust. A revocable trust is a legal arrangement created during your lifetime. You typically place selected assets under the trust, serve as a trustee while you are able, and name a successor trustee to act when the document says that person may step in for you, okay? For many families, A properly drafted and properly funded trust can help assets pass outside court supervised probate process. That can mean more privacy, less delays, and a more orderly transition. Notice I said properly drafted and properly funded, okay? Merely signing a trust does not move your house, you guys, or your bank account or your investment account into it. A beautiful trust binder with nothing transferred into the trust is a very expensive notebook. It may have tabs, it may have elegant paper, it may even smell official, but the trust generally controls only the assets legally connected to it, along with, anything properly directed to it through coordinated planning. So I want you to think of the trust as a safe. The safe can be strong, professionally designed, and placed in the perfect location, but it protects only what is actually put inside of it, you guys, okay? So if the deed to your house remains in your individual name, when the plan required the house to be transferred, the trust may not accomplish what you expected for that home. If an account has a beneficiary designation that conflicts with the overall plan, well, the account may pass according to that designation rather than according to the trust, okay? If an asset requires a special transfer process and nobody completes it, well, the family may still have a problem because details matter. And this is also why estate planning is about more than death, you guys. If you become incapacitated, a well-designed plan may allow the person you selected to manage trust assets under the terms of that document, okay? And that can help avoid uncertainty and may reduce the need for court involvement, depending on state law and the rest of your legal plan. What I want you to know is that the trust should work together with powers of attorney, healthcare directives, account authorizations, and instructions for the people who will help you. We spend a great deal of time, you guys, all of us do. Well, who gets what when I die? When we should be asking who can act, what can that person manage, and what proof will be required if I'm alive but can't handle the matters myself. And you guys, that's not pessimism, that's adult supervision. So let's connect the trust to homeowners insurance, okay? When real property is transferred into a trust, well, the deed changes. It's got to, right? Depending on how the trust and deed are written, legal title may appear in the name of the trustee, acting as trustee of your trust, okay? So your homeowner's policy, however, may still show your individual name. Does that automatically mean you have no insurance? No, it doesn't. Does it automatically mean every claim will be denied? No, that's not true either. Insurance contracts, endorsements, state rules, ownership arrangements, and carrier or company practices differ from place to place. But it does mean you have created a fact that your insurance company needs to know and evaluate. A mismatch among the deed, name insured, occupancy, and insurable interest can create questions, delays, or coverage disputes at the exact moment you can least afford any type of confusion. So that is the real warning. Don't be fooled by dramatic story around an unverified rumor. Build a documented plan around your own deed and your own policy. Call the agent or carrier you're currently with. Tell them the home has been transferred or is about to be transferred into a revocable or irrevocable living trust, wherever you're putting it, and give them the exact legal name of the trust and the name of or names of the trustees. And ask what the carrier requires to reflect that ownership correctly. Real simple. Now, depending on the policy and carrier, that may involve a trust endorsement, listing a trustee or trust in a particular capacity, or another approved method. Don't prescribe the wording yourself, you guys, and don't assume that additional insured is the correct answer in every case, because it's not. Ask the carrier to explain to you so you understand how dwelling, personal property, loss of use coverage, and personal liability apply after the transfer, because those coverages do different jobs. The trust may have an interest in the real property, while you and your family still own personal belongings and need personal liability protection. Okay? And one line added carelessly, like you don't know, should not solve one issue while creating another. So get the answer in writing. Ask for the updated declarations page and every relevant endorsement. Okay, then it's up to you to compare those documents with the deed and trust information. The agent said it was fine is not a document, you guys. I like, just like you, reassuring voice as much as anybody, but a warm telephone conversation is difficult to attach to a claim file 3 years later. Written confirmation gives you something concrete to review, store, and share with your attorney or insurance professional. So put it with your estate planning records and review it at renewal and whenever the trustee, occupancy, property use, or ownership changes. Okay. Now, if the house becomes a rental, if you move out, if an adult child moves in, if the property is renovated, if it sits vacant, or if the trust becomes irrevocable after death, call the carrier again. Insurance loves current facts. Surprises are where arguments begin, truly. So let me give you a simple scenario, because I think this will help. Imagine that a couple owns a home with a substantial replacement cost. Okay. They create a revocable trust and they record a new deed. They continue living in the home and continue paying the homeowner's premium, but they never notify the insurer. Later, a severe windstorm damages the structure. Now, during the claim investigation, the adjuster reviews ownership and finds the trust-related deed. Perhaps the carrier resolves the issue and pays the covered claim. Perhaps it requests additional documentation and causes a delay. Perhaps a policy term endorsement issue, occupancy fact, or state law questions creates a dispute. We can't predict the result without the policy and the facts, you guys. And please don't listen to anyone on YouTube who says they can without knowing your particular situation. I don't care if he or she is an attorney or insurance professional, details matter. Okay? What we can say, though, is that the family has invited avoidable uncertainty into an already painful situation. And you guys, this is not to frighten you. The goal here is to remove the surprise while the roof is still attached. Okay, so let me say this, you guys. This educational network is sponsored by Collaborative Expansion Foundation, together with Vivix Wealth and Insurance Solutions. So let me tell you a little bit about Collaborative. Collaborative Expansion Foundation helps bring practical, useful education, trusted conversations, and community-centered resources to families who deserve more than a stack of brochures and a rushed explanation. If this kind of programming helps you make stronger decisions, support the mission and share this program with another family, and stay connected to the work of Collaborative Expansion Foundation. Okay? All right. Because one thing I want to push is education should not stop at information. It should expand a family's ability to act. So call us today if you want to turn that education into prevention steps with one of our senior advocates. Now, before we continue, it's time for Austin's weekly comment. Austin has a special way of finding the one detail adults have discussed for 20 minutes and explaining it in a few frames, usually while making us look slightly ridiculous. Today's comment brings our trust and insurance conversation to life. So, as you watch, remember the lesson. Paperwork cannot coordinate itself. Oh, that is so true, isn't it? Austin just gave the paperwork more personality than most policy manuals have had in their entire publishing history. So now let's bring back the lesson to your family with trust and homeowners insurance.
What could take everything you built?
So you guys, a trust and an insurance policy solve different problems. The trust directs ownership and management according to its term. The homeowner's insurance responds to covered losses, subject to the contract, exclusions, limits, conditions, deductibles, and endorsements. Okay? One does not replace the other. The trust does not rebuild a burned home. The insurance policy does not tell your successor trustee how to manage and distribute family assets. They must be coordinated, you guys, okay? And life insurance belongs in this same conversation. Life insurance can provide liquidity, cash, when a family needs cash. That money may help replace income, pay final expenses, support a surviving spouse, equalize inheritances, fund a business transition, or help preserve other assets that might otherwise have to be sold. But the beneficiary designation matters, you guys. Life insurance usually pays according to the beneficiary form on file with the carrier, not simply according to what your will or living trust says. Naming a trust as beneficiary can be appropriate in some plans, particularly when money must be managed for minors, or a beneficiary with special needs, or someone who needs protection and structure. Okay? It can also create tax, administrative, timing, or drafting consequences if done incorrectly. So that's important. Don't change a beneficiary to the trust because you heard half a sentence on the internet. Okay? Have the estate planning attorney, insurance professional, and tax advisor coordinate the design. Then use the trust complete legal name and the carrier's required format. Okay? Retirement accounts require the same discipline. IRAs, 401ks, pensions, and annuities may pass by the beneficiary designation or contract terms. Naming individuals, trusts, charities, or contingent beneficiaries can produce very, very different legal and tax results. Rules for inherited retirement accounts have changed over time and can depend on the beneficiary's relationship and status. So this is definitely not a copy and paste or DIY category. Review primary and contingent beneficiaries and review them after marriage, divorce, death, birth, adoption, estrangement, reconciliation, or any major change in the plan. And yes, I said it, reconciliation. and it belongs on the list. Why? Because families sometimes reunite, yet the paperwork remains angry. Your documents don't know that Thanksgiving went pretty well. So you have to update them. Now, let's address a popular misunderstanding about asset protection. Okay. A standard revocable living trust generally does not create a magic shield around your own assets while you remain able to revoke the trust and control the property. Protection for beneficiaries after your death may be possible through carefully drafted continuing trusts or subtrusts, but the outcome depends on state law, the trust language, how distributions are controlled, who serves as trustee, and the type of creditor or government benefit rule involved. Okay? It is inaccurate to promise Please hold on to your wallet with the same seriousness you do when you are at the grocery store. Good planning is specific. Ask the attorney these questions. What happens to each beneficiary's share? Is it distributed outright or held in a continuing trust? Who controls distributions? Attorney in your state. Your family deserves more than a form downloaded at midnight and signed because some stranger in a video said, well, it worked for everybody else. It typically doesn't. And you know what? You don't want to put everything you've worked so hard for on the line just to get it done cheaply. You deserve an individually designed plan built around your family, your property, your state, and ultimately your goals. So here's your action list. Ready? 7, home businesses, which is common now, short-term rentals, and vacant property can require special attention. A trust endorsement is not an all-access pass around exclusions. It aligns an ownership interest. It does not turn the policy into a wish-granting document. 8, review your umbrella liability coverage if you have meaningful assets or liability exposure. 9th, review life insurance ownerships and beneficiaries. And 10th, review retirement accounts and annuity beneficiaries. 11th, confirm that powers of attorney, healthcare directives, successor trustee provisions, and emergency contacts are current. 12th, create a simple annual review date. Okay, estate plans need maintenance. Insurance plans need maintenance. Retirement plans need maintenance. If your financial life has not changed in 10 years, congratulations. You may be the only person in the world whose family, property values, laws, accounts, and insurance market remained perfectly still. But for everyone else like me, schedule the review. Now, let's go over the major points just one more time, you guys. Number 1, a trust can be a powerful estate planning tool, but signing it is not the same as funding it. Assets must be properly coordinated with the plan. Number 2, transferring a home into a trust changes the title information, and that should be reported to the homeowner's insurer or insurance company. Don't assume coverage disappeared, and don't assume nothing needs to change. Verify, okay? Number 3, the right insurance treatment varies, okay? The trust, trustee, and individual occupants may have different interests. Let the licensed professional and carrier determine the proper endorsement. Then, your job, obtain it in writing. Number 4, homeowners insurance and a trust perform different functions. You need both parts to do their assigned jobs correctly. Number 5, beneficiary forms on life insurance, retirement accounts, and annuities can control how those assets transfer. Review them alongside the trust, the will, and your overall plan. Number 6, a revocable trust does not automatically complete asset protection. Continuing trust may offer beneficiaries important protections when properly drafted, but there is no universal promise, so don't fall for that. Number 7, review the entire system after major life changes, and at the very least, you guys, annually, all right? Details matter, but coordination is what makes the details work together. Now, just an FYI, you guys, people are already calling me now to prepare for the Medicare season this fall. Yay! But please don't wait until the last minute when everybody suddenly remembers that deadlines exist and the telephone begins behaving like a fire alarm. And you don't have to say you're my friend, okay, for any type of special treatment, because everyone who calls is my friend, and I give all of you guys special attention, okay? All I request is that you call now and schedule your free review of what you currently have so you can understand and really know your options and be prepared when the time is right to move forward, okay? And for all of your insurance needs, including Medicare, life, and health insurance, retirement planning, and coordination related to trust and estate planning, call Vivix Wealth and Insurance Solutions at 833-300-4968. You may also email us at info@Secure65Health Okay? Now, for established life and health clients with us, currently with us, who want assistance with their auto for a home and auto discount, I can also assist reviewing home and auto insurance needs. Okay? I don't like doing it, but I will. Availability, appointments, products, and services may vary by state and licensing. Okay? So just call us. Now, what I ask is that you do me a favor by liking, sharing, following, and subscribing. Send this episode to the person who created a trust, placed it on a shelf, and has not looked at it or the deed or the insurance policy since. We're not here just to inform you, you guys. We're here to help you every step of the way. Your family shouldn't have to discover a missing connection during a crisis. So make that call today, okay? Ask the questions, get the answers in writing, and give your future self the gift of being prepared, protected, and calm. I'm Moné Swann, and this has been Talk Power Thursday. Remember, a legacy is not merely what you leave. It's how carefully you prepare the people you love to receive it. So stay happy, stay healthy, stay informed, and know, for always, you remember, I love you. Go out and have a great life, and know you've got support right here at Secure 65 Health Plans on YouTube, LinkedIn, Facebook, every place that you can possibly see us. So don't be stingy. Share it with the people you love, because we love you. Bye.
I'm so glad I found Moné and Secure 65 Family Legacy Office. They took the time to explain everything, and now I feel confident knowing my family's future is protected. My children and grandchildren mean everything to me. Working with Moné gave me confidence they'll be taken care of no matter what.
When you've worked hard to build something, you want to protect it. That's exactly why I chose Moné and Secure 65 Family Legacy Office.
What you built, protect what you love. Stand what you love. Stand strong before the storm and rise above. Give your family direction. Give your loved ones a voice. The best time to prepare is while you still have a choice. Protect what you built. Protect what you
Bibex Wealth Insurance Solutions.